Some decades ago, the typical retail investor had to select and manage their own portfolio of individual equities, and this strategy was dangerous due to its lack of diversification and high commission costs. However, these began to change in 1975, when the first index investment trust was established by the late John Jack Bogle, founder and former chairman of the Vanguard Group. The investment management industry owes a great deal to the index fund that was once mocked as Bogle's Folly, but finally blossomed into the widely known Vanguard S&P 500 Index Fund. Index funds have made it possible for investors to passively track the market's average return with a single ticker while still reaping the benefits of diversification and cheap costs. That's why in this video, we are going to take a look at the 6 best index funds that you should look into this 2022. Hi everyone, this is Fred. Don't forget to smash the like and subscribe buttons, and let's start with Number 6. The Vanguard Mega Cap Growth Index Fund, or VGMAX. This index fund is designed to replicate the investing results of the CRSP Mega Cap Growth Index, which represents the highest capitalization growth stocks in the United States. Now, this index fund invests in a particular subset of the US stock market. With 102 stocks, it now possesses major stakes in all of the main corporations. For this reason, it shouldn't come as a surprise that this index fund has generated a return of 18.09% over the past decade. Therefore, if you had invested $10,000 in 2012, you would now have nearly $57,000. This index fund is not a necessary component of a diversified, low volatility portfolio and should be held by only a small percentage of investors. These index funds' surprisingly low expense ratio is a major selling point. Now, the annual fee on a $10,000 investment is merely $6 at a rate of 0.6%. However, Vanguard obviously can't just hand you the keys to this fund. In order to get started investing, they'll need a minimum deposit of $5,000. However, much like every other fund on this list, this index fund is also offered as an exchange-traded fund, or ETF, and the ticker symbol for this ETF is MGK, which stands for the Vanguard Mega Cap Growth ETF. The only difference is that this is an exchange-traded fund rather than the VGMAX index itself. Number 5. The Vanguard Total International Stock Index Fund, or the VTIAX. This fund aims to replicate the investment results of the FTSE Global All Cap X Index, a global stock market index that excludes the United States. For passive investors, having a fund with foreign exposure like this can be a great way to spread risk across a wider range of markets. To clarify, this only applies to those who invest primarily in passive vehicles, such as index funds or exchange-traded funds, which is presumably the case for the vast majority of you. About 7,532 equities from throughout the world are held by this Vanguard fund, with prominent positions held by Taiwan Semiconductor, Nestle, Samsung, and a few others. Currently, the average return over a 10-year period is 6.61%, which indicates that $10,000 invested in 2012 would be worth about $19,000 today. Once again, this fund is not meant to serve as your portfolio's primary holding, so it's safe to say that it shouldn't account for more than 10% to 15% of your portfolio at most. There is an annual expense ratio of 0.11% for this index fund, which translates to a cost of $11 on a $10,000 investment. It's worth noting that, like the vast majority of Vanguard index funds, this one has a $3,000 entry point for new investors. If you want to start investing, you'll need at least $3,000. Number 4. The Vanguard Growth Index Fund, or the VIGAX. This fund aims to replicate the price and yield performance of a benchmark composed of large-cap growth equities traded on the CRSP US Large Cap Growth Index. This index fund has a laser-like concentration on growth stocks, and not just growth stocks. Only large-cap growth stocks will do. As a result, this index fund is not highly diversified, which is a drawback. And you should diversify your portfolio by adding another index fund that invests in stocks of all sizes to this one. This index fund invests in 267 different equities, and some of its biggest holdings are tech heavyweights like Apple, Microsoft, Google, and Amazon. Moreover, given the growth orientation of the fund, the 17.41% average 10-year return suggests that $10,000 invested in 2012 will be worth close to $55,000 at present. It has one of the lowest expense ratios among the funds considered here. The yearly fee is $5 on a $10,000 investment, or 0.05%. This index fund, like many others, has a $3,000 minimum investment requirement. However, if you can't afford that, you can invest in the Vanguard Growth ETF, or VUG, instead. Now, before we continue with this list, don't forget to try our Super Thanks, wherein your comments will be highlighted, or you could join our membership program. And now, let's continue. Number 3. The Vanguard Dividend Growth Fund, or the VDIGX. This actively managed fund uses the S&P US Dividend Growers Index as its primary performance metric, since it is an index of US companies that have increased their dividend payments for 10 or more years. The funds in this investment portfolio are actively managed. This is not the case for the vast majority of the passively managed funds, which is likely where most of your investments are currently being made. When it comes to making daily investment decisions, an actively managed funds manager or management team is in charge. To maximize profits, they aim to outperform some kind of market index. On the other hand, a passively managed fund does nothing but track a market index like the S&P 500 or Dow Jones Industrial Average. A team of managers does not make investment decisions for passive funds daily. Now, compared to other funds, this one has a relatively modest portfolio, consisting of only 42 stocks, the largest of which are TJX, Colgate, J&J, Koch, and a few more. Only established dividend payers will be considered for investment in this pool. Stocks in firms like Amazon, Tesla, and Google won't be available because they don't distribute a dividend. If you had invested $10,000 in this fund in 2012, you would have over $38,000 now, thanks to the fund's performance of 13.94%. This index fund is more expensive than average since it is actively managed. An annual fee of $26 on $10,000 invested is the cost of the fund's 0.26% expense ratio. Number 2. The Vanguard Total Stock Market Index Fund, or the VTSAX. VTSAX goal is to replicate the performance of the CRSP US Total Stock Market Index, which is designed to capture the performance of equities across all market capitalizations in the United States. And assuming an annual return of 15% over a 10-year period, an investment of $10,000 made in 2012 would be worth around $43,000 today. These funds' assets currently consist of approximately 4,139 stocks, with major positions held in companies such as Apple, Microsoft, Google, etc. This index fund has a very low cost ratio of 0.04%, which means that on every $10,000 you invest, you will only be required to pay $4 in annual fees. And finally, if you want to invest in this fund but don't want to pay the $3,000 minimum, you can simply purchase the identical exchange-traded fund, which is called VTI and stands for the Vanguard Total Stock Market ETF. Number 1. The Vanguard 500 Index Fund, or the VFIAX. This fund provides investors with the opportunity to gain exposure to the S&P 500 index, which is an index that monitors the performance of the stock market as it relates to the 500 largest firms in the United States. If you want a fund that utilizes the S&P 500 as a benchmark like this, VFIAX is one of the greatest buy and hold investments you can include in your portfolio. The fact that this fund invests in the S&P 500 index should not come as a surprise. As a result, it holds approximately 500 equities, the majority of which are held in Apple, Microsoft, Google, and a variety of other leading US corporations. Because the return on investment for this fund over the previous decade has been an annualized average of 15.39%, $10,000 invested in the fund in 2012 would have grown to around $44,000 today. The expense ratio of this index fund is significantly lower than those of the other funds on the list. If you invest $10,000 and receive a return of 0.04%, your annual fee will be merely $4. In addition, if you want to avoid making a minimum investment of $3,000, you can invest in VOO instead, which is the equivalent of an ETF and has a lower expense ratio. So, which of these 6 index funds do you think fits your investing appetite? Let me know in the comments section below. And after that, make sure to hit the like and subscribe buttons as well. Now, if you're new to investing and want to know where to start, then make sure to click this video right here and see you there.